What's going on, everyone? What took 2.5 months to go up only took about 3 weeks to a month to come down. What I mean by that is the Nasdaq 100 not only coming off those lows back on 6/17, I believe, right? 6/17 came off those lows of 269.28. We had a nice 2.5 month rally into almost this 200-day moving average, which I was really watching for. If the market would have gotten over this 200-day moving average here, kind of put in a new high, back tested, consolidated, and pushed off higher, I would have then said that the bear market for 2022 is now over. But that did not happen. It took very short time to come crashing all the way down. Now, we did top tick here on the 16th of August. So from August 16th to present day, just a little over a month took us to give back all of those gains. And now we are back down trading here at $274.37. So today was pretty much a flat day. One thing that I did not like on the triple Qs is that at one point in time, we did try to go green and we did try to push higher, but we got rejected at the 5-day moving average. Now, if we look at this green line here, the triple Qs, which is the Nasdaq 100 stocks, this is going to be stocks like Amazon and Apple and Microsoft, Tesla, so forth and so forth, AMD, Nvidia. We have been trading below this trending. This is a power trending moving average. This is a power trending supply zone. We have been trading below this ever since we gapped below on the 13th of September. So since September the 13th all the way until present day, which is just about almost 2 weeks worth of trading, we have not yet reclaimed the 5-day moving average. Now, your thought process has to be right now, not saying that if you're an experienced scalper that you should not be going long, taking a quick trade here and a quick trade there. But again, if you're more of a novice or more of a beginner or intermediate day trader or swing trader, you should really not on a day in and day out basis be looking to trade the markets long if we're below our daily power trending supply zone. So the 5-day moving average, use that kind of as your guide. If we are over the 5-day moving average, it's okay to put a little bit of risk on and try to look for those long trades. If we are below the 5-day moving average, what we want to do is to ignore the noise of the bounces in the green days or the green pops and kind of just wait for those rejections, right? Wait for those rejections. If you can wait for those rejections, look at this here. When we kind of gapped down below, traded sideways, put in a new low, and here on the 16th of September for 1, 2, 3, 4 days, we kind of rallied sideways, did nothing, go up and down, and right here on this day looked like we wanted to close over that 5-day moving average before harshly being rejected. So if you would have just waited for the rejection here at the 5-day moving average, waited to close below, which was on the 21st of September, all you would have had to have done was wait for the confirmation below this day's lows off the rejection of the 5 SMA, and you would have potentially been in this trade for 2 or 3 days. Now, this went from a price of around $283 all the way down to a low price of $271. That would have been a fantastic 2-day move, which could, for some people, depending on your account size, could have been a one and done for the month type of trade. If you put on enough exposure, $10, $20, $30, $40,000 worth of, especially if you're trading options, a trade like that over a 1-2 day swing is enough to make up a P&L for at least 2 weeks to a month. Okay. Now, right now is not the time where we want to be making 10, 20, 30 trades in a day. Right now, we want to be extremely cautious. We want to size down a little bit. We want to wait for those macro moves. We want to allow technical analysis to tell us what exactly to do. Listen, I am no smarter than the next person, and you are no smarter than the market. We are all very dumb individuals looking at a bunch of candlesticks, reacting to an open marketplace. So instead of trying to guess and predict every single 1 minute and 2 minute and 5 minute candlestick on where we potentially could be heading, why not let's just allow the bigger trades to set up, kind of get that macro feel of things and allow things to kind of develop in a healthier manner and allow us to have a little bit more stress-free and allow us to be able to sleep at night. So what I'm looking at here is we did at one point in time try to make an attempt to push higher here and get over Friday's highs, which I was a little bit excited about at one point in time. Did trade a couple of stocks to the long side. Again, like I told the people in my Discord today, I'm going to size down. I'm going to take profits a lot more quicker, and I'm just going to look for a very fast cash flow move, right? Anytime I say cash flow move, that means I just want to get in, I want to get a little bit of money, 10, 15, 20% on a particular options play, and I want to sell for profits, and I want to just get the heck out of Dodge. I don't want to be holding these things all day because anything can turn in the blink of an eye. So as we started to make this push higher, one thing I was looking at here was this declining 5-day moving average. Now, we didn't touch it to a T, but we came pretty darn close to getting into this supply zone here. And as we came into the supply zone, the bears kind of said, hold on, pump your brakes just a little bit. We are going to go a little bit lower. Now, I don't really like this candlestick. This is a reversal candlestick. This is kind of telling us here that we got some weak price action coming in. This little candlestick that we put down here closed near the lows today. So what I'm going to be looking for here on the triple Qs, as well as the stocks that I like to trade, which is the Nasdaq 100 stocks, which is mega cap and big tech. If the triple Qs start to give up today's lows of a price of $273.37, I will be looking to take my favorite stock and or the index to the downside. I will be buying put options, and I will be trying to target a price on the triple Qs of around $272. Now, if we do start to lose that 272, the next price that I'm going to target is this 617 or 616 low, $269.28. Now, if I get into a short position here and everything looks to be going as planned with no, crazy intraday reversal bounce that gets over the 5-day moving average, that's going to shake me out of my position. But as long as we just keep treading short, I will just feel confident holding this short position with a macro price target of that 269.28. Now, at that point in time, between 269 270, I'm going to probably clear up 60 to 70 of my position, depending on the stock that I'm playing, or if I'm playing the index, or I'm playing something like Apple, or something like Tesla, or AMD, or Nvidia, or Microsoft. So what I'm going to do is try to clean up 60 to 70% of my position around 269. I'm going to hold around 20 to 30% of my position as a potential runner. Now, that runner that I'm going to be playing on these contracts, I'm going to use a break-even stop, meaning that if those contracts do get back up to that break-even price and I go from being positive on those contracts to now break-even or slightly negative, I will quickly exit that position and still being able to come out profitable on that trade because I've already have locked in that 60 to 70% gain. Now, at that point in time, if we do get some sort of macro flush where we are going to put in a new low below 269, that's going to be the move that I'm going to want to be heavily involved in. Anything below 269 does have macro space down to 260, 261. So make sure and kind of keep your eyes on that. This is our max potential here, but we could be getting ready to do some consolidation. I would not be surprised if this week going into next week, we get 1, 2, 3 days worth of sideways choppiness action where ranges start to contract, maybe even see some sort of 2 or 3 day dead cat bounce reversal back into 283, if not 283 to 286. That would be the 10-day moving average. 292 would be the 20-day moving average. If we get some sort of bounce like that, definitely there will be some opportunities to trade to the long side, but let's not even look at that until we get at least over the 5-day moving average. Guys, if we have not been over the 5-day moving average here in 2 weeks, why do I want to start guessing and anticipating to go long now? How about I just let the chart tell me, hey, bulls are getting a little bit of momentum here. This is going to be the first close over the 5-day moving average. Let's look for some of that confirmation and we'll play that, if that happens, right? From 280 to 283, that's a potential trade. From 283 to 286, that's a potential trade. And obviously anything over 286 into 290, 292, that's a potential trade. That's how I would play that to the long side, but the charts have to show us that. Market could be getting ready to put in a new leg down. Market could be getting ready to consolidate a little bit. Either way, we are not out of the mud here. Either way, this is still a bear market. Either way, 2022 is an absolute shit show for the overall markets as a whole. I hope everyone is staying safe out there. If you guys want more extra added help, make sure to join my Discord. That link is down in the description box below, and I will catch you guys on the next video.